Hi, we're here with an early concise highlight on Friday, October 16th, 2015. It is currently 7 a.m. U.S. Central Time. And it was quite a day yesterday in the S&P 500 with the significantly higher activity and new high for the current swing, reinforcing the bad news is good news psychology on continued weak data that ended up spurring the market higher. And where this leaves us on the market activity is with the S&P 500 future off 3 today at 2016, and that's still out above the previous high and still right up into about where the market closed last night, which is right up against the key 2020 trading high from back on September 17th in the lead contract. So we're going to be keeping an eye on that 2020 area to see if it in fact can exceed it today. In other words, establish escape velocity above the various resistances around 2011 to the 2015, that's price level 2015, down break on the weekly chart from back in August. And in the meantime, the market was pushing out above, again, 2011 to 15. If it should lapse back below 2010 again, it might be ready to take another swing down in the range. It has some interesting congestion now, though, right around the 2000 area, and which is not necessarily a big technical level previous and is still only a minor level. But most importantly, on the activity out of late Wednesday into the opening on Thursday, this market had dropped back below the 1990 to 88 support. It probed it early Wednesday, tried to react back up on weak data. That was, of course, on the U.S. retail sales. But then it seemed like the results and guidance from Walmart helped put the market down again late in the day below 1990 to 88. But once it gapped higher on Thursday, pulling back at mid-morning, it could not get below 1990 and then was pushing up again throughout the day. And there was no further news. It was just further sense of accommodation from the central banks based upon U.S. weak data. In fact, part of the up gap yesterday for the opening was that Europe had seen more of the weak data in the U.S. and also that Australian weak data, and just said, hey, bad news is good news. We know the central banks have to remain accommodative right now. If it escapes 2020, the next resistances are not until 2035 to 40 area, and we'll see more of that momentarily on the intermediate term charts. However, for right now, note how the market that leaked out below the lower runaway band on Wednesday early and stayed down when the market weakened later in the day. Note how by approximately the second hour yesterday was already cleaning up. So even as they pressured this in the 10:30 to 11:30, was already showing the downward momentum coming out of the market after the gap higher. Now we're out above the upper runaway band, and that's why the question is, can this weaken off back below that key 2010-11 area? If it can, then maybe it diffuses the upside momentum. If it cannot, we have a feeling the upside momentum maintains, and your next stop is going to be that 2035 to 40 resistance. That pretty much does it for the short-term view of the S&P 500.